Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about 23andMe and selling the deal to the board. And when you're going through a takeout or an offer process, it's all about fiduciary duty. And fiduciary duty is this idea that the board has to make the best decision for all stakeholders involved. And that means the best decision for them as the board member, best decision for management in the company, and everyone in between. So, what are the key considerations of trying to get to that right fiduciary duty response? And it starts with this idea that it's a fiduciary duty. You have to do what is right for everyone, not just yourself or the specific board member or just for management. Number two, personal interest is involved here. Board members are people, management are people, and we need to understand the specific triggers or motivations of each person involved. And finally, this idea of an intersection point of fiduciary duty and personal interest. If you want to get a deal done, you need to figure out where the fiduciary duty of each board member equals their personal interest or trigger points in order to get them to say yes to the deal. So what are the basic components of creating this picture to inform and convince the board that the deal is the right deal? Well, it starts with operational data and think situational analysis. What is the need of the company? What do we need to turn this business around? What are the resources, people, money we need to keep going forward? Number two, financial data. Think about liquidity concerns. Is there a liquidity crunch or crisis? And what's the turnaround going to cost in people, resources, money to keep the lights on going forward for several years? Number three, a market analysis. Think about what is the capital markets environment facing the company? Can we raise money? Is our markets closed? Is it a difficult environment? And then number four, a competitive analysis. And think about the exogenous factors impacting, say, bellwether companies in our industry. For instance, if there's a large shareholder in a large company that can put pressure on that stock price, that may harm us. Think of those types of scenarios that are negative, and if they come true, would inadvertently harm us or make a deal more attractive. So when you want to put the plan into action, there's two things you need to consider. The first is you need to have direct conversations with each board member to inform and convince them that they're doing the right fiduciary decision by taking the deal. And number two, it's a negotiation. You need to use the picture that you created with these basic data components to find that intersection point of fiduciary duty and personal interest. And if you find that intersection point, you will get a deal done. So what are the key learnings? Deals are all about fiduciary duty. The board needs to feel that they are making the right decision for the best interests of everyone involved. Number two, to get the board to see your side of the story as the best fiduciary decision requires communication. You need to meet with each board member independently to inform and convince that you have the right plan of action. And number three, you have to negotiate with each of these people to find their intersection point of fiduciary duty and personal interest to get the deal done. Thanks for watching.